it's Vivian, your hot stock girl. Today I'm going to discuss the relationship between risk and reward in stock market investing. What is risk in stock market investing? The biggest risk is you buy only one stock and the company files for bankruptcy, which leads to you losing all of your money when the stock goes to zero. You can lower this risk by buying more than one stock and by doing a significant amount of research before you invest. A common mistake investors make is looking at the charts, doing absolutely no research, and hoping for the stock to go up based on its past performance. I can tell you why that strategy doesn't work. It's because they don't know what they are buying. If the thought of losing all of your money sounds like too much for you, then you may want to invest in more than one stock and do a lot of research. When you invest in more than one stock, you are diversifying your portfolio, which means you are diminishing the risk. When you do research on each company you invest in, you are also mitigating your risk because you will get a better understanding of the company you own. For most people who don't have the time to study individual companies, I recommend buying mutual funds, or ETFs, which are also known as electronic traded funds. These types of investments own many stocks in their portfolio, which spreads out the risk that any individual stocks could perform poorly. You can start your research by looking up a company on Yahoo Finance. Other good sources for stock information are Seeking Alpha, Bloomberg Business, and SEC.gov. On future videos, I will go more in depth on how and where I do my research on the stocks that I follow. Well, that's all I have for you today. I'm Vivian, your hot stock girl, and go ahead and check out my other videos for more great investment ideas.